Hi everyone, hope you're all doing well, and today I'm talking about the free stocks to buy January 2021 edition. Moving on to next year already, kind of crazy, isn't it, that we're going into 2021. I made the classic mistake. I had to restart this video intro because I did the classic thing of putting 2020 and then I was like, oh no, we're in 2021. Had to rub it out, put the one there. I always do it, so yeah, I'll probably still do it through February and March. I'll be putting the wrong year down. I'm the worst person for it, but yeah, we'll get stuck into the video. So yeah, free stocks to buy in January 2021. This is where I talk about the stocks that I'm looking to buy in the month of January, or have already started buying a few of these shares already going into the month. This video should be going up on New Year's Eve, so I hope you have a very good New Year's Eve, or whatever you can do, and have a Prosecco in your front room, I guess, because there's not much else to do. But yeah, we'll take a look at the free companies I'm looking to buy in January. There's a few more, but these are the real key ones that I'm looking at right now. So yeah, we'll take a look. If you do want to know when I'm buying and selling companies exactly, make sure you join my patrons group. There's also some amazing exclusive content on there where we do portfolio reviews and everything like that, which is really good, as well as knowing what I'm buying and selling. And if you do want to buy any of these companies, there's a link to a Trading 212 account in the description and a free trade account. And if you join through those links, you actually get a free share, which is also pretty good. But yeah, we'll get stuck into the free stocks to buy January 2021. Now, I am going to give it honourable mention. I thought Alibaba was going to make this list, but it's just had such a good few days that you guys know that I started buying this one, but it's gone up. So I think I don't think I'll be buying any more of that right now. And I thought Gang were going to be on this list, but Gang's saying hello to $20 again. So yeah, unless that Gang comes down a little bit to $18 maybe, then I'll buy a bit more. But yeah, those two were very close, but they've just missed out because of the recent runs they've been on. But yeah, these three are definitely ones that I'm looking to get into. So number one is HUYA, and I've not talked about this one for on the channel for a while. I have had a few of you guys asking, can I talk about it? What's going on with it? And yeah, I've just kind of been watching it, thinking, yeah, I'll wait for it to go a little lower, and then eventually go buy it. So HUYA is one that I will probably be buying quite heavy in the month of January, and I'm a big fan of this company. It's a stock I've been buying for quite a long time. So for you guys that don't know what this company is, basically this company is involved in the streaming service in China. And yeah, there's a lot of things going on right now with this company, and that's why it's on declining down. And the main reason why is, first of all, there was a lot of news about the delisting on US stocks, Chinese stocks on US stock market, caused a headache, and the stock went down from that one. So that was the first thing. The next thing is that HUYA announced it was going to be merging with Douyu, and the stock went up. And you'll see on the stock chart, the stock was going up. And then all of a sudden, they announced the terms of the deal and the merger, and everyone was like, they've overpriced Douyu and underpriced HUYA, and then that caused everyone's go sell the shares in HUYA and move to Douyu. So yeah, that's caused a bit of a problem. And then there's also been the news about looking into Chinese companies, trying to create a monopoly. And Tencent are a big holder in this, and it's a Tencent going to get looked into. So there's been three things that really caused the stock to really drop down back to $19. And when you look at the chart, look how cheap that is. This is near where the stock pretty much goes down to. So it's a pretty big discount. It's, even though the merger's a great thing, the stock's kind of took it as a negative. Before the merger, the stock was even higher, and the merger will be absolutely amazing for it. So yeah, HUYA has been hurt by a lot of short-term news, and as a long-term investor, I'm trying to look past that, and I'm thinking it's a great opportunity here in HUYA. So obviously, when the merger happens, if it happens with Douyu, which I hope it does, which is probably the catalyst which will lead it to go higher in 2021. As soon as the merger's done, it should be pretty good for HUYA. But when that merger's done with Douyu, HUYA will control 80% of the streaming service in China. And when you think about the streaming service, online gaming, esports, it's massive in China, and it's growing. It's a huge growth sector. So HUYA will dominate very much in a big growing sector, which is amazing. There'll be no Twitch coming around here. So HUYA will do very well, especially when you think about the growth. There'll be new titles coming out as well. So if the merger happens, it will be a great thing for HUYA, and that's when it will kick off in 2021. And that's all we're waiting for. Now, while the stock is down here at these sort of valuations, I think it's just easy money. I hardly use that. You guys know when I say easy money, I hardly use it. But when it does, I do use it. Normally the stocks do go up quite a bit from here. And that's when I really like a company. You're guaranteed to make money on this one. And I think that's where HUYA is right now. It's definitely down at easy money territory. I think when you look at the forward P is attractive. I can't remember exactly. I'll probably be showing it on the screen right now, but last time I checked, it was something stupid, nearly 17, maybe 16. Yeah, I mean the forward P is absolutely crazy for a growth company. Like when a growth company gets into the teen forward P ratio, I'm like, this is dirt cheap, and that's what HUYA is. And then we take a look at HUYA and we look at the growth, for example, and they're going to start making a lot more profit this year. We saw that last year, the last quarter of the recently report, I think profit was growing at like 100% rate, which is crazy. So that's really good. And then obviously with the profit growth, you look at the revenue growth is like 30% growth. So there's a massive growth company here. And like I said, you've got Tencent as a backer, which is really good. And then from a balance sheet point of view, very strong on the balance sheet. You can't fault it really. So yeah, I mean, it's really hard not to like HUYA at this sort of valuation. So attractive, and yeah, it's definitely on my list of companies. It's definitely one that I'm looking to add a lot into over the coming few months anyway. So yeah, could come a major position in my portfolio. So number 1 is HUYA. Number 2, Beyond Meats. So this company is a company that makes plant-based meat products. So try and get as close to the real thing as possible by making out of plants, I guess. And yeah, I think Beyond Meats had a shocking last quarter, caused the stock to go down huge. I was like, right, let's have a look at this company. It's probably one of the growth companies with the higher valuations that I'm buying, but at the same time, Beyond Meats is a company that I'm buying, and like, yeah, I'm definitely holding this for a long term. And when I think about long term, I see Beyond Meats probably 3xing in the next 5 years. So that kind of shows you where I'm at with Beyond Meats. I do think I will get a good return off this one. And yeah, Beyond Meats really went down on the stock price because of the last quarter earnings, which were a bit of a short-term thing. And once again, I'm looking at this as a long-term investor. I'm thinking, how much does this short-term situation affect it on a long-term basis? And I'm like, it's probably only going to affect it for the next 6 months. So really, Beyond Meats went on a massive discount because the company is obviously based in selling the plant-based products in like supermarkets, but the other income stream that this company has, and where it's like different to Tattoo Chef, is they actually sell their products to like Starbucks, and they're on about partnership with McDonald's, Dunkin' Donuts, Pizza Hut. And with a lot of these companies, they're giving their plant-based products to them, and then they can offer something on their menu from Beyond Meats. So that's great from Beyond Meat's point of view, because then you're getting free branding. Imagine your brand being in 20,000 Pizza Hut stores or anything like that. It's really great for Beyond Meats, and also it gives them more revenue, which is a win-win situation. Now, obviously, when you think about it, Roni came around, and obviously a lot of these restaurants are not having people coming in to eat and sit down and eat the meals, and that kicked back on Beyond Meats. They kind of didn't really plan that out, and they ended up with a lot of backlog of products, and yeah, it caused a headache for them. So yeah, that could have been something that was a little bit better managed from Beyond Meats, but hey, it's one of those, you could have been in a situation where the restaurants didn't shut down, and then they'd have been like, hey, we want some of your plant-based products for this meal that we have on our menu, and you're not giving it to us, and then it would have killed the relationship with the brand that they're working with. So I mean, it's a tricky situation, but yeah, I mean, Beyond Meat's got hit by pretty much Corona and restaurants being shut, and when you think about that, how long is that going to be around for? 3 more months, 6 more months. Beyond Meats will come back strong after that. So the partnerships they're building are amazing. More restaurants, more outlets, they're selling more products, the branding awareness they're getting out there, and also when they actually ramp up, through Europe, selling the products as well and everything like that, and more distribution centres like China growth as well. So yeah, I mean, Beyond Meats is going to perform amazing from that point of view. You see it on the growth point of view, when you look at the growth, it's going to be amazing over the next few years. So yeah, I think Beyond Meats, when it ramps up a lot more of these partnerships, get into a lot more of these supermarkets, Beyond Meats for me, it will be, I think it's like, an 8 billion market cap company right now. I see it probably being like a 30 billion market cap company within 5 years. So yeah, there's definitely a lot of upside in this company for sure, and yeah, I'll be buying this one as long as it's down at this sort of price range. It's just kind of like last few days, it's just been kind of sliding a little bit downwards, and I'm like, okay, this is getting back to interesting prices. So yeah, Beyond Meats I'm a really big fan of. And number 3 is Glu Mobile. So I posted a full video about this yesterday, talking about this company, and yeah, it's a mobile gaming company, and I'm a big fan of this one. If you'll notice in particular, all 3 of these companies are like growing industries. You can see that I always look for companies that are in growing industries. And yeah, Glu Mobile, mobile gaming, is growing quite a bit. Obviously, it's had a surge in 2020 because of the Corona and people being at home and being like, I'm bored, what can I do? I'll download a game on my phone. Obviously that's definitely helped it, but going back to what it normally does previously and what it will do this year is back to its normal growth rate, which is about 10% revenue growth. So yeah, we've got a nice little growing company here in a growing sector as well, which I think even the 2020 numbers will still help it in 2021, for example. Yeah, I mean, first of all, the valuation point of view, as well as being a growing sector, the valuation, I think it's like a forward P of like 17 or something right now, which once again, for a growth company at that sort of valuation, dirt cheap. So that's really attractive. Profit is going to grow profit huge a little bit this year, so that's going to help it on that point of view and the forward P and everything like that, as well as the revenue growth. So that's really attractive. Balance sheet, very clean balance sheet. It currently has something like 300 million in cash, zero debt. So it's actually now at the point where it's looking to actually acquire another company. It's previously done this as well, and it's been very successful acquiring other companies. So you think if they go out and buy someone for like 70 million, then that's only going to help their revenue in 2021, 2022. And we'll probably get more details about this within probably the next kind of 6 months. We're probably, they're actively looking to acquire someone, and I reckon that we'll probably announce that within the next 6 months. And as well as that, they've also got Tencent as a shareholder, which is really good. And going forward, obviously, the big thing is like they've been really successful the last few years, but why is the growth going to go up? Why is the share price going to go up? Why is the revenue going to go up? Well, they're actually bringing out a few new games. So they've got two different segments in the company. They've got a company which focus on a bit more of the female audience, and a bit more of a games company which is focused on the male audience. And I think overall it's 5 games they've got coming out this year, which historically these games have been very successful when they've done previous models, and as well as that they've got a history of bringing out very successful games. The management team here are very mature in the industry. They've worked at major companies, and also they've been at Glu a long time as well and had historic success with this company as well, which is very key as well. So yeah, I mean, Glu Mobile, I definitely like this one, and it's definitely one that I'm looking to buy. Hopefully around, below $9 would be amazing. If I can get it below $8, that'd be really good, because I see this company in the next 2 years really. A bit more of a shorter term hold for me, this one. I see this one probably going to about somewhere between $16 to $20 in the next 2 years, which would be a nice 100% return. So yeah, I'm a big fan of this one. And those are the 3 US stocks to buy in January 2021 edition. I hope you enjoyed it. I hope it gave you a lot of information. If you could and you made it all the way to the end, smash the like button. As well as that, if you are new, subscribe. Comment down below. Let me know what stocks you're looking to buy in January 2021 as well. Always interested in that. And I'll see you on the next video in 2021.